Alright, let's get into it. This is Capo. We are gonna talk about volume profile and maybe a little bit of auction market theory. So volume profile, I'll give you a visual first. Volume profile shows how much volume is traded at each of these price levels, right? Um, it's not candle based. It's just level based, I would say, like numbers. Um, just volume profile shows volume by price, pretty much meaning that it helps the market understand, or not, it helps the market. It shows where the market is in agreement and where rejection is, right? So we have a couple different things we need to understand, right? First things first, point of control, POC. Point of control is going to be the price level where the most volume is being traded during a session or a composite period, right? It's estimated as a fair value, meaning this is where you'll find chop. Chop or consolidation will happen in this area basically because the market is in straight. Oh, sorry, this music's kind of loud. Um, Basically because the market is comfortable in this position, so kind of it's a reference for like acceptance, right? The market is being accepted in here, so don't expect anything to happen. Um, it's often combined with a high volume node, right? Because a high volume node is a zone of volume, I would say. Um, Zone kind of because it's like the climax of the volume profile, right? So like let's say you want to visualize this, right? Our low volume nodes, well, I'll talk about the low volume nodes right now, but the the chart goes, let me let me get right here. I can do it on trading view. Okay, so we have our volume profile, right? As big as it goes. Okay, we have a volume profile, right? Jeez, hold up. I'll just do it like this. Okay, so like let's say this is our volume profile, right? This area will be considered high volume node, right? It's the price where most it's it is the area where most price is being traded, right? But it's also going to be a point of control since most volume is being traded. The point of control would probably look like this, right? So we have our point of control, and then these ledges are usually referred to as value area extremities. I just refer to them as ledges. They're gonna be our low volume ledges. It's like you go climbing, right? You have this super high mountain, and then what's underneath this mountain? A sharp drop into a valley. The valleys are known as low volume nodes, right? So low volume nodes are gonna be low activity zones. Price moves quickly through here, right? So we can often expect prices to kind of either reverse or act as acceleration points to the area goal, right? So low volume nodes are price points, or not price points. We have price points that these buyers and sellers do not agree on, right? So often the low volume nodes tend to favor one of the participation there, right? So either the goal is for sales, right? Either the goal is for sales, where's it? Either the goal is for sales, right? We either can do this straight down, or we can do this, right? That's pretty much how a low volume node is, right? It will act as resistance. However, if we're trading above this low volume node, we can have a pullback into the zone and a trade off of it, right? Or you can even have one of these back into the high volume node. So things like that, you can usually expect price to you can expect low volume nodes to have drastic changes. Um, I personally only trade low volume nodes. Add on YouTube. Okay, so it's kind of it's just low volume nodes are what I trade, and I think I made a video explaining the index of it and how I trade it, but they're pretty well. Um, we also have our value areas, right? So value areas are going to reflect 70% of total volume that's being traded, representing the market's fair value, right? So a value area high, which is this part up here, which marks the upper boundary, and then we have the volume area low, which is the lower boundary part. Price inside this value is the market is balanced and rotational. When price moves outside of the value, it's testing higher if higher or lower prices will be accepted. Rejection outside often leads to a rotation back into point of control, leading to chop, right? So, like, let's say this is our volume profile right here. Right, like let's say our upper 70 and our bottom 70, right? Actually, let me do a different color so I can. Okay, bro. Okay, so like let's say this is our upper boundary, then the 70% will be this part, right? And then our lower, does not look good. See our lower 70s right here, right? So, okay, let's say our 70% is being traded in this. It's not the best visual representation, right? But you can often consider that whenever this volume is being traded in here, we will have rotational price zones, right? So like let's say if we were trading this high volume node, you can often expect price to break out, right? Like let's say we're in a chop zone, right? We break out to one side. If it doesn't, if except you often hear me explain this concept of acceptance, right? If it doesn't accept this upper boundary, you price is going to come back into here and maybe try again for higher. If not, price is going to seek the lower boundary, right? This is where you get your chop low, your chop high, right? So you often expect price to do this. You can also have price come in here, test the upper boundary, test the POC, right? Because we also have a POC here. Have a POC here. But you can often probably expect it to probably even fade this into the lower boundary and then take it back up highs. If not, you like it will explain more of the concept right now. But I wouldn't truly trade it this way. I do not like trading volume areas. Most people do. I personally don't because you can have a lot of error when it comes to trading this. Because price is fast moving and the market. It's good when you compare with TPOs and other things, but for this purpose, we can have another concept about high volume node acceptance and transitioning zones, but maybe this will help it explain more. You can pause the video here and take a screenshot, but this is pretty much a kind of a guide I made for us for this video. So auction market theory is the price advertisement, volume confirms, time proves acceptance, right? So the auction process, finding value, right? This is the chop in between the ledges, right? Or the seven no, sorry. This is a chop in between the 70% area acceptance, right? Whenever it leaves value area, one side becomes aggressive, price it quickly displaces, right? Acceptance of the value area is going to be price holds above the level, volume builds, candles overlap, pullbacks hold. Right? Rejection means quick move away, long wicks, no time spent. Pretty easy. We have our key auction levels, right? From prior sessions is the high volume nodes. It's an agreement and balance. Price often rotates or consolidates here, like what I was saying, right? Low volume node, low volume disagreement is a disagreement or imbalance of price range, right? It's usually going to be these ledges at the bottom, right? pretty good for trading. You trade these and act as support and resistance. They work wonderful. Um, Key action levels, right? We have the X's highs, which means sharp rejection of higher prices. Volume is not being spent. These highs, neither is time. We have our value area high, which is the upper 70% boundary, point of control, where the most volume is being traded. However, it's not going to look like a gap in here because if most volume is being traded, it's going to be a high volume node. So I don't know, I don't know what happened here. But consider this as the blue one over here, right? Then your point of control will be looking something like this. Then you have your value area low, which is the lower edge of accepted value. And then we have excess lows, another sharp projection. We have balanced market rotationals, so price and side value. It's two-way trade. You just trade from value area low to point of control to value area low. All right, pretty rotational market. Then we have an imbalance market, which is a trending market, right? We prices outside the value and every break holds, right? Every pullback holds. Um, Low volume nodes are often seen as being pushed through, right? Imbalanced, meaning you have huge candles shoot to the low volume nodes. So whenever low volume or whenever price comes back into these low volume nodes and they start holding, that's a trending market. So you just trade continuations. You guys can read this at the bottom. It says bullish signs, acceptance above value area highs, pullbacks hold above value, bearish acceptance between value area lows, pullbacks fell under value. Balance signs, POC's magnet, failed moves above very high and low, right? So an example of very high or value area rejection back into value area low will be this, right? We reject the value area low, we failed to spend time, then we reclaim this value area low, right? Oh, sorry. Oh, okay, what it says sweep this low, right? So we sweep the value area low, and we come back into this value area low. Sweep. I don't know why this looks like this, but it says a long example, so I'm guessing it wants to reclaim our value area low, right? Value area acceptance plus breakout and hold. So we retest the value area high and we start trading above it. That's our continuation model. LVN rejection, it will be short model, right? So we have our LVN, price comes into the LVN and rejects the LVN, right? We have our POC magnet trade, which means it's a reversion, right? So if we pretty much are going to be fading the value high or the value low, right? So we're going to trade one area to one another, which is pretty much how you trade chop. We have prior high, low sweep, liquidity grab, pretty much just sweep of a previous day high. I kind of use this sometimes depending on if we're trading above value area highs or lows. This will be pretty good to trade back into. We have intraday AMT framework, right? So open inside value is balanced, open above is bullish, open below value is bearish, open outside of gap is watch for an acceptance or rejection of range, right? So I'll go ahead and I can send this to you guys too if you guys want it, but that's pretty much how we do it. And then we'll go quickly over how to set up trading view to trade, right? So we'll go to the left side and we'll go to this forecasting, and then we'll go to volume profile or anchored volume profile. I would put that one first. Pretty much what you want to do is probably go to a larger time frame. Since we're trading all-time highs, you need to take this volume with a grain of salt because it's not too well rounded and built enough for us to be stable and actually be traded on. Can I? Okay, that's good enough. And then we'll do a fixed volume profile range. I usually do fixed depending on like how we're trading in an area. Like if it's a super small area, you can do fixed. But it'll pretty much show you the same thing. Also take TradingView data as a grain of salt because it is different from like Rithmic data trading. As you can see, it won't always be the same. Okay, so let's practice how we would use this, right? Visually, you can see a high volume node. You can also see the point of control. Let me change the color of the point of control. Okay, the yellow line is going to be the point of control. You see how this range was rejecting this point of control multiple times, and it came back into a value area low. I mean not value area low, sorry, a low volume node. And this low volume node held, and we rejected higher off of it, right? You can see how this high volume node up here, right? Because this is how you mark a high volume node zone. You can see how prices continuing to come back into the zone. This is where pretty much price is being comfortable trading at, right? Because we spent almost a whole day Thursday trading in the zone. So we rejected once, and then we kind of had a trending from a value low into a value high range on Thursday. So pretty well. So let's back test this. Let's do something where I haven't seen the charts. So let's go back into like the 30-minute zone. Probably preferably before all time highs. Oh, this is all I can go. Okay. Well, let's trade this chop. Okay, we'll draw our fixed profile, right? And then we'll have our anchored volume profile. Okay, we have our anchored volume profile and our fixed. Okay, so this is a 30-minute chart. What am I seeing? I'm seeing a low volume node transition, right? We rejected this low volume node perfectly on the 30-minute chart, and now we're seeking a higher area, right? We're now trading above the point of control, meaning we are now technically bearish and we can see it's the upside. I'm seeing high resistance here at this point, and this is why I don't like trading view, because this low volume node is a 70-point gap. I mean, usually I try to keep my low volume nodes between 15 to 20 points, and here is 70 points. So like I'm probably gonna take some drawdown on these trades, but like it's as best as I can do. Now I come down into the 5-minute. Well, actually, let me go to the high time frame and mark um low volume nodes. I'm gonna do it with a line to save us time. If you wanna be more perfect, you can do zones, but I'm gonna do these to like save us time. So I'm not going back to the higher time frames, and I'm pretty much marking out low volume nodes here, and I will mark out my high volume nodes that I'm interested in targeting up here with different colored lines. Maybe even this one, point of control. Pretty much will chop around here, bro. It looks like. Okay. I'll go down to 3-minute. Okay. So these blue lines are low volume nodes that we can see, right? We can see how they are holding and what. But let's see. Okay, let's see. We're on the 3-minute chart here. Let's see what trades we can do. We're coming into resistance, like I said, right? Looks like we might get a low volume node tap here. Pretty sure that was our tap right there. That entry should have been right there, which was like 4 points off. Okay, we get another retest. We'll see. They'll give it more time. So it pretty much tapped into that low volume node, and now is expanding higher, right? So good test. This was market open and Y is pushing continuation, right? So now if I see a push like this, now I'm looking like we're trading into imbalance zone, right? So price is trending unless price breaks this high, I'm expecting price to hold a bullish state, right? So we're at 11 a.m. Our entry should have already been something for NY, but okay, Asia open. Seeing we're staying in this high volume node area, right? Pretty choppy. It's building volume in a resistance zone, so you can expect a big push one way. See how it's falling in a high volume node area? Price is pretty trendy. You buy at the lows of the value, the low volume nodes, and you sell at the highs, right? So if it comes into this low, I can attempt to place a bid here. But I just why I don't like paper trading because I can't stop it fast enough. But this would have been a good bid. You would have already been up 20 points. 20 points scalp. Pretty much just go and break even, right? Okay, like, let me get a little deeper bid. It's not breaking. Okay, we'll try it. Take it up to the value low, right? So if we're risking, in this case, 30 points to make 60-ish points, 55 points. Pretty much trading chop. So I would want my stops to be a little more balanced. Okay, nice trade. There we were up about 50 some points, right? Pretty much to the top of the range we took it. If we really wanted to